Hey, what's up, y'all? I'm going to break down the formula that is used to determine what you owe in taxes. The better you understand this formula, the better your opportunity for you to understand how to pay as little taxes as possible. So let's go. So the first thing you're going to do, you're going to calculate what's called your AGI. Your AGI stands for Adjusted Gross Income. The adjusted gross income, oops, I wrote that a little too high. The adjusted gross income is determined by calculating all your W-2s and your 1099s that you receive. W-2s, of course, relate to all the jobs that you've worked over the course of the past year. Your 1099s correlate to any type of dividends, capital gains, any independent contracting opportunities that you got paid for. That's all 1099s. And then you got like your 1098s as far as any type of contributions to your retirement, contributions to your health insurance and so forth. So those are all your 1090 type forms and your W-2s. You take all of that in consideration and that'll give you adjusted gross income. Once you have your adjusted gross income, then you're going to subtract your deductions. There are two types of deductions. You have your standard deductions and you have your itemized deductions. Itemized. If you are renting a home instead of owning a home, you probably would just go standard. But if you own a home or you have a small business, then you're probably going to go itemized. That way you can write off any of your deductions, such as your mortgage interest, any type of small business write-offs. If you are tithing or have some limited contributions or donations to charity, then you maybe want to put it in your item. You probably want to go itemized instead of deductions. Many websites can help you determine which one is right for you. So you can submit it all and it'll tell you you're better off with the standard than the itemized. Once you get your AGI and subtract your deductions, you're going to get called your taxable income. Now, this is used to calculate what's going to go into further what tax is going to be owed, right? So now you subtract your deductions. You subtract your deductions from your adjusted gross income. Now you have your taxable income. One thing to take into consideration, particularly if you are a small business owner, be sure you don't write off so many deductions that you have small taxable income, right? A lot of times we want to pay as little tax as possible. Unfortunately, sometimes that can nip us in the bud in the end, because if you have so little income, it's going to be more difficult to qualify for big purchases such as buying a home. I remember I had one friend that was trying to buy a home, and she made over $100,000 a year in her job, but according to her taxable income, she only made 40 grand a year and couldn't qualify for the home that she wanted. So you want to be sure you get the taxable income in a way that you can still move forward in life the way you want to go, right? So then once you have your taxable income, I'm gonna move down here. Once you have your taxable income, then it's going to put you into a tax schedule, tax table. And that tax table, depending on your tax bracket, is going to calculate what type of bracket you're being to pay taxes. However, there's one more calculation you put in there, which is called your tax credits. Now here is where you can add in as much list as possible, whether it be adoption credit or energy credit, if you have solar panels or an electric car, earned income credit, all these credits, that subtracts from the taxes that you owe, right? So then that is the final calculations, taxes owe, and let you know where you owe or you're gonna have a refund. So be careful with deductions. That subtracts from your taxable income, but your credits subtract from actual taxes owed, right? So that's the difference between deductions and tax credits. Many people get confused about how to be sure that they're paying as little tax as possible. You get more benefits out of the tax credits than the deductions, because deductions just takes away from your taxable income, but the tax credits takes away from taxes owed. So that is the simple formula for calculating calculation for filing your taxes. Adjusted gross income minus deductions gives you your taxable income. Taxable income puts you into a tax schedule to calculate what tax bracket you're going to fall in, to see how much you're going to pay in taxes. And then you subtract the tax credits, will give you whether or not you're going to be paying taxes or you're going to get a refund.